You're watching Famous Dave on YouTube.
All right, we're live and welcome back. Let's just give it a second for people if they're going to show up to show up. But it's been a crazy last couple days with the market, with the rate decision, and them deciding to raise rates, which wasn't a shocker, but the market reaction of a big rally and then a big sell-off that occurred has created opportunity. Now, I was taught to trade. Some of you probably don't know me at all, but anyways, I was taught to trade by professionals who were very successful, and I was a floor trader in Chicago for many years, and I was a market maker, that evil term that gets thrown about, the hedgies and the market makers, etc. And one of the things that I was taught was that crazy times like the last two trading sessions, the times when the market is most volatile and the craziest stuff is happening, those are the moments of the most opportunity as a trader. But it's also, it's kind of like a high risk or high reward thing, and you need to be really focused when stuff is moving around like crazy. But these are the moments where you can, where there's opportunity. When nothing's going on and stuff isn't moving, there's just not a whole lot of opportunity. Yes, you could, sell some options and just kind of sit on them. And then if nothing's moving, and you have a position, if you're positioned for stuff to not move and it doesn't move, then obviously you make money. But just in general terms for trading, the points of most opportunity is when big stuff happens. Now, people play things like big events like catalysts, like earnings or a Fed decision. Some people will play them by taking their position off and then putting it back on once things are quote unquote back to normal. And that's certainly legitimate. Everybody has their own way of doing things. But yesterday for me personally was a good day in that I did make money. Now, it was a bit frustrating in that at some point during the middle of the day, I was up the most money I was of the whole day, and then I gave about a little over half of it back by the end of the session. So let me just talk about what happened to me yesterday, and then we can move on from there. Let's take a look at the charts here, and I'll get out of the way. So at the beginning of the day, I had a position on in GME, GameStop, and then I took my position off, and I put a position on in UVXY, which is what I have on right now. Now, GameStop, long-term followers of the channel will know that I've been short this for a while, and it has been going down. However, I kind of feel like I've sort of ridden that horse into the ground here, and maybe it's time to get out of my short and sort of take the money and run. So that's what I did yesterday. I consolidated and I closed my position out with the stock right around kind of where it is right now. Right now it's basically 117 bid at 118. And I've been watching UVXY for a while. Obviously, with the market sell-off, UVXY has spiked. The VIX has been in spiky situation for a while. Let's see if it's giving me an error message for Thinkorswim here. This is Thinkorswim, the trading system I have up here. And I figured it was time to maybe put a little bit of a short position on, because you can see the price action here. This went all the way down to 14, and then it skyrocketed all the way back up to 18. And so I decided to put a position on. And what I did was I actually bought puts, which is kind of a cardinal no-no. You don't want to be owning puts for any period of time here. But I wasn't planning on owning for any period of time, just sort of less than 48 hours. So I bought some front week puts yesterday. I paid 38 cents for the 16 puts. And that hasn't worked out so far, because when I bought those puts, UVXY was 17, now it's 18. So they're doing nothing, and I have less than a day for those to work out one way or another. So we'll see what happens on the open. If the market does rally from here, then they'll work. If it doesn't, then those are basically toast. And I bought 20, so the $800 I spent on those could go out the window if we don't get some sort of rally today. In addition to that, I bought some puts a couple weeks out as well. So I bought some puts, let's see, 7 days out and 14 days out. So it's kind of a hodgepodge of different put options. You can see I bought some 14 days out, some 7 days out, and some that expire today, with the idea that this has gone way up. All the market needs to do is stop going down. It doesn't even need to rally. It just needs to stop going down, and this will come back off the highs. If we look at UVXY here, we can see it got all the way up to 1976 a couple sessions ago, then kind of tanked down to 14, and now it's way back up here. You know, in the grand scheme of things, I'd rather sell it when it's up here around 18 than, you know, down here at 11 or whatever. And I've been laying off, waiting for the right point to when I thought like it might be a good time to put a short on. And, you know, giving myself 7 days, 14 days, I think it's a very reasonable assumption that this is going to go down in the next 7 to 14 days. Now, it would be best if it went down today. Even if it got to 16 today, that would be a big win. The puts I bought yesterday, I bought the 16 puts, weekly puts, paid 38 cents. So these puts right now, they went out 16 cents bid at 19. I paid 38 cents for them. They got all the way up to almost 70 cents. I put an offer in, and I didn't get filled. And then I wasn't aggressive enough, and they just went all the way back down from 68 all the way down to 16 cents, as you can see here. In addition, I bought this 4 lot of puts, paid 33 cents for those. So this is a significant amount of money here. It's like $1,000 right here in this front week stuff. So it would be great if we could get at least somewhat of a rally. And if not, I'm just going to have to bail out of these because I don't want to lose. And it sounds like a little amount of money, right? You know, they're trading at such small amounts. But if it doesn't look like we're going to rally, I'm going to get out of this because I don't just want to lose the whole value of them. In addition, these other puts, if we look at the ones 7 days out, these ones I paid $1.17 for, so they're right where they were. These ones I paid $1.84 for, so they're down about 15 cents. So that's kind of where we are with this. I bought all these options when UVXY was around 17 to 17.50, so we're up about 50 cents from there. But once again, all we need is a little rally some point during the day here to put these back in play, and we'll see what happens. As far as the GameStop situation goes, if this does kind of rally back, if we look at the chart for this one, we got as low yesterday as 15 and change. We haven't broken the low in the last couple of days, which makes me a little nervous that maybe this is going to, I still think this is going lower, but it hasn't, it's kind of settled in this area for the moment. So I have no position now, but if we were to rally back to like 126, 130, it might be a time to reestablish that short position. But I'm happy. My account, since I put the short on, my account has basically doubled, and I'm happy with those gains, and I'm willing to kind of, if I have to, walk away from GME and find something else. Sometimes, you know, in the market, you can find something that works for you, but nothing works forever, and being able to walk away from something that's been working for you is a skill that's very difficult to acquire, right? Most people, what they'll do is something's working for them, and then they'll just stick with it even when it stops working, and they'll stick with it, and they'll give up everything they made when it was working if they're not careful. I would assess that as a lot of the people that bought these meme stocks, GME or AMC, they made money, or they watched other people make money when these rallied last January, right, over a year ago, and they can't shift gears now. They're like stuck in this thing like, oh, well, those are my stocks. I'm married to them. I'm going to stay with them because I don't know why. Maybe it's this is their only experience with the market, and they can't switch gears. And if you want to survive as a trader, you need to learn how to switch gears, right? Something works for a while, and then it doesn't anymore. And being able to realize at some point, maybe you don't realize as soon as you should have, but realizing at some point that something isn't working anymore and moving on to something else is a skill that you need to acquire and develop as a trader. And it's certainly a good argument that being long GameStop and AMC stopped working at some point, right? If we look at the charts, here's GameStop. Okay, it had that initial rally, and certainly, yeah, it's been great. Let me get out of the way just to kind of highlight this. So, yeah, it had that initial rally, and that was awesome. People made money. It had another rally, and that was great. But since then, it hasn't really been doing a whole lot. And then AMC, same thing. It never really, AMC even more so, never really recovered its first glory. And people, maybe they participated in this big move or maybe they didn't, but people are stuck with this idea that this move is going to continue. And the evidence is that it's not, right? And to be able to shift gears and get yourself out of that. Now, all the social media and the buildup around these meme stocks and trying to all of the Reddit stuff and the team building and the tribalism and stuff has really made it difficult for people to shift gears. But I would, if you're one who is long these, and I'm not telling you what to do, and maybe these will turn around and go straight up, but I would at least consider shifting gears at some point because it looks like, right, that this made a huge move and then it went back down again. That's what AMC looks like to me, right? If you look at GameStop, a little less clear here, right? It made one move and then it made a second move, which was pretty cool. They've got stuff happening, but the company still needs to transform itself if it's going to be successful, and it hasn't made that transformation yet, right? I'm just talking fundamentally here with the company. Once again, less clear, but might be time to shift gears if all your eggs are in the GameStop basket. Remember, there's thousands of stocks out there. All right, let's take a quick look at the term structure. I'm going to let you go. I don't want to make this too long. So the VIX term structure is, as you would imagine, a little bit wacky, right? Because we are in a spike, and thus we are in backwardation, we are inverted, and we're in spike mode, and that's what it looks like, right? When we say inverted, what we mean is that this line here is above these lines here, right? This is the VIX spot price. Now, the VIX spot price is there's a formula to which they obtain this number. It's based on some option prices in the SPX index. These futures trade freely in the marketplace, and their prices are determined by people buying and selling them. When you've got the futures sloping downward, we call that being in backwardation. It's not a normal situation. You can see here contango is negative, thus we're in backwardation. However, this number is very small, and thus this term structure here is not really affecting, or I should say, the forces of backwardation and contango, which are represented by this number here. The fact that this number is so small is confirming for us that these forces are not really playing very much on VIX products right now. Now, most VIX ETPs, UVXY, VXX, UVIX, are based on these first two futures, some sort of average of them, and they're around the same price right now. So this whole term structure thing is not really factoring into this equation of what we want to do at the moment. What is factoring into the equation is whether the market rallies or sells off, and that remains to be seen. I have no crystal ball. I can't tell you if the market's going to rally or sell off today. However, if the market does rally, we'll make money. If it doesn't, I'm going to have to bail out of this position. That's kind of where we are. Just to look at the Greeks here to see the GameStop Greek short 4 delta is collecting $16 a day. I have a small residual position. And UVXY short 1,200 deltas, costing me $840 a day. So this is hot potato. I'm going to have to do something to get out of this today one way or another. Either it's going to go down and we're going to make money, or it's going to go up or stay here and we're going to lose money. I'm talking about the front week stuff I need to get out of. I might stick with the farther back stuff because I do believe that the spike is going to end at some point. And it's been going on for a while now, right? How long has the spike been going on? Let's see. This current spike has been going on since February. No, since, let's look at a 20-day chart here. So this started basically around the 21st of April. So it's been going on for 2 weeks now, right? That's pretty long for a spike. So we'll see what happens with this. I don't need it to completely go away. Just need a little rally in the market for this position to work out. So we'll see what happens. Thanks for checking in with me. I appreciate everybody's support. We are going to get a second camera and make this more flashy for you, and that'll be fun. We'll see you next time. Thanks for checking in with me. I hope you have a wonderful day out there. Ciao.